Hello, my weekend video guys. Follow me Gumby9662 on Twitter and retweet this video if you get a chance. Appreciate likes on Twitter and at the bottom of this YouTube channel if you find the information useful, and please make some comments at the bottom of the YouTube channel. Appreciate all the feedback and stuff. So, guys, I was actually looking to see if they could hold her down there Friday. We had that bad news out of Apple. It was pushing right at the bottom of the range, right there early in the pre-market. I did the video fairly early, so uh, I thought there was plenty of time for them to try to push down below. So my bias was slightly bearish to the bearish side there Friday, looking for the breakdown. But we did not quite get that. So be very mindful of that. We didn't get it. Basically, nothing of the megatex or anything pushed down below their supports. In fact, they defended everything, and they early on rallied it. Okay, so it was one of those days off very critical support here. So this line right here represents the 100-year trend line based off of 1929 and the 2000 tech bubble. Okay, so we're currently putting in a head and shoulders pattern right above that this trend line. Okay, and we did not manage to get a lower, and we also defended the 20-week moving average so far here. So that could very well be the case. That could be it for the reset. A lot of people don't think we're going to have the market sell off until the third quarter. Uh, so I've drawn this out for some potential scenarios here. So I do think this is a major, this 100-year trend line is a major area that we're going to probably be spending most of the year trying to defend. Okay. So I was on the bearish case there Friday, but we bounced off. So I'm actually going to make the case that we might be setting up for an earnings rally back into all-time highs. And then when the earnings come out, possibly putting in the final potential blow off top for a bigger head and shoulders pattern on the weekly. So this would be this entire area here would be the left shoulder. Let's see if I can draw this real quick. A second here. So this right here would be your left shoulder. Okay, guys, and this up here would be your potential head, and then set up into, we could take this all the way out to July, setting it up for this potential up into that area into July, and then going into the third quarter, we'd start looking for then that moved lower into the third quarter. That is a scenario also. Okay, guys. So a potential head and shoulders pattern. Uh, as far as textbook goes, putting head shoulders over a major trend line right at near the highs, this is quite interesting because if we were to do that, that could actually create a flash crash situation to the bottom of the head and shoulders pattern right here. Okay, we could be breaking that trend line, coming down to the bottom of the head and shoulders. You could do it, put it there, or you can actually put it down here too. Okay, down here is 5,700. But we could actually be setting up a flash crash off of the head, and that typically marks a more a common approach to the a all-time high top. So be mindful of that. That could potentially be a more realistic all-time top scenario. So we're looking to for price to stay under 6,500 on the SPX, and possibly top out as even at 6,300. And with this final phase, potential final phase, we would be looking on our oscillators for some divergences to really start forming at these peaks here, at this potential peak above the 100-year trend line. So we'd really want to start seeing some divergences forming to justify this scenario going forward here. Okay. Okay, guys. So some things I was looking at early on, right out of the gate there Monday. I noticed how immediately the put call ratio was opening lower than the prior day's open, quite a bit actually, suggesting to me that there were some buyers underneath the hood early on in the session. Uh, so I was really be hesitant to jump in to the markets. We did open up with uh, Uval Devol was actually a little bit weaker. So that was giving me a mixed read on the open. So I said, well, with this mixed read on the indicators, I'm just going to sit back for a few minutes here. And eventually it resolved to the upside, of course. That's what we all know. But I was looking for the downside, but I was looking for a better risk reward scenario. Uh, I did try to do a short. It took me out there Friday. I lost a few $100 and I called it quits. Uh, but basically, we had a very high open on the advanced decline there Thursday, first day of the year, and it sold off hard. Okay, and we put that new lower low in. Okay, and then we had the relief rally pretty much all day Friday on the breath side. This is our breath indicator here. Okay, so that's pretty much what I saw was going on there, and we were at the extremes of the expected moves for the week, and they just didn't have any follow through to the downside. Hey, traders. Okay, so I'm gonna have this. Basically, what we did here on this move down here, anybody knows anything? Elliott wave 1, 2, extended 3, 4, 5. And that 5 took us right down into the weekly 20 SMA to the tick. Okay, guys, so this was a beautiful, perfect Elliott wave down to a major support area. And now we have come back up. Okay, so be very mindful of that. And bottom line is we are looking, since this is the top of wave 2 up here, we are looking for price to hold below 596. Okay, guys. So for the current bearish thesis, which currently we're still technically in a bear flag, we would definitely want price to remain under 596 for that thesis to remain. Okay, so be very mindful of that going forward here in your trading. Bottom line is we still got a fair value gap below us, earnings gap. The only one that hasn't filled the election gap is the S&Ps. Qs, the Qs, Russell, Diamonds, they've all filled the election gap, but the S&Ps have not filled that yet. So there is a thesis that that they're going to want to finish filling that election gap down below us here. So we have to be very mindful of that possible scenario going forward. Then on the flip side, we're 2 weeks out from earnings season. They may be wanting to run us back up near the highs for the earnings season kickoff. And a lot of times it's buy the rumor, sell the news scenario. Let's see how this plays out. Like I said, 2 weeks. We are in that potential earnings season run up period. So we have to be mindful of that scenario as well. So the Qs did not regain fully the fair value gap. We still have resistance. Okay, we did break out the Andrews pitchwork potential here. So that's a little bit more bullish. So we did accomplish something here. We did close above the 4-hour 200 SMA. So bottom line is we really want to see prices 516.60 or lower to be bearish. Otherwise, we have to lean possibly to the bullish side here. So be very mindful. The prevailing trend is up, so we do have to lean that direction. Hopefully there. Okay. So bottom line is on this one here, 523.32. That's our line in the sand as that wave 2 on that one as well. We really don't want prices above 523.32 for the bearish scenario. So definitely keep that in the back of your mind going forward here. But it did do a major thing by crossing over the Andrews pitchwork. That's actually helping support the bullish thesis. Heads up on that. IWM. Still acting really bear flaggish. So heads up on that. Still acting quite bear flaggish still. Still not seeing a lot of participation in that one. Diamonds. Still acting bear flaggish. So just a few of them. I mean, the diamonds, the daily 200-day moving average is right down here. It just seems like a magnet to me. Only time will tell. Okay. Hang on here. There. Okay, guys, some takeaways here. So the time range I've got on this chart right here is December 26th and 27th. That was the last last full week trading week of December, and that's when I told you whenever we had that big sell order that came into the markets. And I want to point out is that sell order hit at 592. So that was the lower one. There was another one higher. At the time, these were actually showing up as red. Okay, I don't know why they're not doing that now, but they were significant sell programs. They're hitting at around the 592 area. Now, if you go back to my chart on SPY, look where we should close, guys. 592. So this is a really, really important. So basically, we've looked below where that big order hit, okay? And now we're back to it. So it's really a big critical, that 592 is a really big critical area. Now, that also being said, if you go back to my chart, you see that other big order that puts us up around the, I don't know, 595. Okay. There's another big order around 595. And I was talking between 595, 596. And I was telling you 596 is the last line in the sand for the bear case. So we do have another order sitting up here at that. So both on that day, back on the 27th, we had two big orders, and both of them are pretty much lining up with the levels that I just called out. Okay. That being said, we had some big orders execute at 592 again. Okay, so heads up on that. So a fairly decent sized orders right here towards the end of the day, or executing again right here at that same area that they have executed before. So right here, right now, just knowing what happened the last week, I would think that those orders are more likely to be sell side than buy side. The colors of these here, they don't represent. I mean, these are just these are just showing executions. They're not showing direction. Okay, guys. So be mindful of that. We had a large order execute here uh, around the 144.50 area. A large order executed on NVIDIA. So we want to see early on, write that in your notes, 144.50. We want to see if NVIDIA is holding above or below that come Monday, 144.50. We have a large order that did execute. It's in the top, uh, almost the top three quarters, or it's the top 2/3 of, trade size. Okay, guys. So, and it did execute. We had a fairly large trade here at 410 on Tesla as well. Be mindful of that. So those are the top two that I'm actually looking at first thing Monday morning. I want to see if Tesla's opening at above 410 or not Monday morning to give me a really good try to indication of whether that was a buy or sell in the markets. Another one I wanted to point out was of note. 3 o'clock in the 90 percentile on sizing, 93 percentile. We had a order they executed on Broadcom. So be mindful of that. And it looks like we closed below that execution price. So we definitely want to keep this on watch here. It executed at, what was it? What price is that? Oh, yeah, you're looking at 230, 250, something like that. Another one I did want to point out here, going into the close, we had a fairly large order in Palantir execute. So heads up on that. You're looking about somewhere around the 79.50 area or so on Palantir. So you want to mark that down in your notes. See if prices are opening above or below the 79.50 area to try to get some feel of where they were actually trying to push price. So Apple really didn't, given the news, Apple didn't break out above that range low at all there Friday. So that's a little bit more like a bear flag. Microsoft managed to close above a fair value gap, a little bit more bullish. Nvidia closed very strong, but we did close into a lower high target scenario. So be very mindful of that. This is where you would be actually looking for a lower high to establish itself. But after such a strong move up into that, it would probably, I mean, that it would be unlikely for it to come straight back down. But not really a pattern that I would want to be shorting. But that's what it is telling us. We are into a major target. Uh, Broadcom closed weak on the weekly here, potentially stepping down week on week here. So be very mindful of that. Amazon closed fairly constructive here, possibly breaking to new all-time highs, setting up here. Google just looks wedging out here. We don't know the ultimate end game here, but it looks wedging out right now. Let's see how it plays out. Meta was one of the first stocks to be coming off the lows, so that was giving us an indication that it is probably going to be a leader on any upside rotation. So be very mindful of that. This is not one. This is probably one of the last ones you want to try to fade. Another technical indicator I do want to point out to you guys: the skew actually ticked up slightly Friday versus Thursday. So be mindful of that. We had a short squeeze rally, and there was actually more puts added by the end of the day than calls, out of the money calls. So just a little tidbit of information you might want to be mindful of that by no means that rally Friday uh, had anybody taking their hedges off the table. So be very mindful of the skew, how what reading we've got here. Okay, so that's all I got to say here. Bottom line is you don't want to get overly bullish yet. We need to go higher, basically 596 or higher, in my opinion, to actually start getting bullish. So on the SPY. So okay, guys, thanks a lot for watching, and appreciate any feedback. Thanks.